Welcome and thank you for joining me for Tax Break. This is a podcast about South African tax for South African tax professionals and practitioners. My name is Pieter van der Swan, and in each episode I share my thoughts with you on a topic or a recent development in South African tax. And I try to keep the episodes short enough that you can listen to them if you need to take a break from work or whatever else you might need a break from. This week's topic comes from the fact that there are many February year-end companies that need to submit their tax returns within the next month and a half or trusts that must submit their tax returns by the 20th of January. And in the context of these tax returns, they require information about the beneficial owners of the company or the trust. Now, the question that triggered the topic is someone asked me if we already provide information about the shareholders to SARS on the share register section of the ITR14, why should we then give the same information in another section as well on beneficial ownership? And the more I corresponded with the person, I realized that the way that they are looking at it, or that they're trying to find the meaning of this term, there might be other people who also follow the same approach and who also wonder about what this term beneficial ownership really means. Now, before we look at the tax return, let's maybe go a step or two back to see why is this information being requested on the tax return. Now, the Financial Action Task Force identified certain deficiencies in South Africa's laws and regulations relating to anti-money laundering, terrorism, countering terrorism financing, and countering proliferation financing. And so after the evaluation that they performed, South Africa was grey listed. And in response to the grey listing, the government developed a national strategy, which then included beneficial ownership disclosures for companies and trusts. Back to the tax returns then, so the ITR14 for companies and the ITR12T for trusts. These tax returns have a section for beneficial ownership information, but they don't really define what's meant by the term. Now, what I realized as I spoke to the person who asked the question was that if you look at the Income Tax Act, where I guess it would be the natural place to start looking if you are unsure about the term and you're completing your income tax return, we find the term in two places. Firstly, in the dividends tax legislation. Now, there it's important to know who the beneficial owner of a dividend is, because that affects whether you are qualify for exemption, whether the dividends may be subject to a reduced rate of dividends withholding tax under a treaty. And we also find the term in the context of capital gains tax and the disposal of certain insurance policies, where you need to establish who the beneficial owner of the policy is. Now, I do think that if you look at the overall context of the tax returns that you're likely to deal with, the context is different. Those questions are not aimed at dividends tax, which has got its own tax return, or even capital gains tax on insurance policies. So how do we then know or what the term beneficial owner is intended to mean on a tax return? And the answer there lies in Section 1 of the Tax Administration Act. Now, in 2023, in line with this response by the government to the grey listing, the Tax Administration Act was amended to include the definition for beneficial ownership in Section 1. So that definition refers back to the Companies Act definition of beneficial ownership, and it also refers to the Trust Property Control Act definition. It's also got a section that talks about who the beneficial owners of a partnership would be. Now, the term beneficial owner, if you look at the rest of the Tax Administration Act, there's no other reference to this term, but as you are completing your tax returns, you are busy with the process of completing a return, which is something that the TAA deals with, and the broader process of the tax administration. What also further confirms that the term beneficial ownership in these tax returns is intended to mean beneficial ownership as in the response to the grey listing is firstly when we look at the explanatory memorandum on the amendment to the Tax Administration Act. That confirms that it's part of the response to the grey listing. And then also, I think as a last point that's also really of that supports that this is the interpretation to give this term. So as soon as you start populating these fields, there's a reason for beneficial ownership where you need to explain why someone is considered a beneficial owner. And these reasons align with the definitions in the Companies Act and the Trust Property Control Act. Now, I'm not going to analyze these definitions. That's something one needs to do in the context of the specific company or trust that you are looking at. But I would like to as we move towards the end of the episode, just point out a few things that, again, perhaps just gets back to and distinguishes what the difference between a shareholder in the share register would be and the beneficial owner as required by these sections. Now, if you look at these definitions in the Companies Act and the Trust Property Control Act, the beneficial owner is the person that they're looking at there is an individual or a natural person who has got a beneficial interest in the entity. Whereas a shareholder could be a company or a trust or some juristic person. The second difference that I would like to point out is that the persons listed in these definitions are not just shareholders who hold an ownership interest. It also goes a bit broader that, for example, in the context of a trust, we include trustees. In the context of companies, we're looking at persons who can influence management, appoint and remove directors. So it's a much broader concept than just the shareholder. If you are completing a tax return and you've got some questions, the SARS guides on completing the ITR14 and the ITR12T they've got a bit of further guidance on this, including on operational questions. For example, if you've got more beneficial owners than the space on the form, what do you do then? So to close off, the first important point to take home is that the concept of a beneficial owner is not the same as the shareholder as requested in the share register section of your company's tax return. Second point is that this concept is aligned with the concept in the Companies Act and the Trust Property Control Act, where the TAA definition also refers to. That's it for this episode. If you've got any feedback or questions, you're more than welcome to send me an email. My email address is in the show notes. And if you like the episode or the podcast, tell your friends and please subscribe on the channel where you listen to the podcast. So this podcast is currently available on Spotify, Apple, and my YouTube channel. As always, I would just like to remind you that the podcast is not intended to be tax advice or a substitute for fact-specific tax advice. Until next time, goodbye.